I'll just see sometimes all you're moving this shit around, which is all your USB stuff, and just decided to crack the shits, and now it's working. Yeah, thanks. I just die. Okay. Hi there, traders. I'm just getting a few charts up and running, and then yeah, I'm good to go. So just bear with me 1 second. I had a bit of a hissy fit today with my computer about 5 minutes ago. So I think I got everything sorted. So we'll see how we go. But if anything drops out, any sound or anything like that, it'll probably be my end. It's just the USB seems to be playing up for some reason. All right. I've got a couple of things up. Well, it's 23rd, Friday the 20th. 4th, Saturday, 22nd. Oh. All right. Who we got in today? Let me just see. G'day, Pete. We got a few in. All right. Good to see you guys. Hope we're doing well. Welcome to Trade Setup in the live stream. It's the 25th of Jan. Anyone that's new, welcome on board. Hope you enjoy our content. There's a bucket load of content that's on our YouTube channel as well. So it'd be great if you can leave us a like on anything that we do. And yeah, subscribe to us on YouTube and you'll get all the latest updates. So you should get, anytime we're going live, I'm just working it out, putting something up in YouTube preemptive, which I think you should get an alert to saying you're going live today at 12:30 or something like that. So you should get told earlier too if you're not subscribed to the app. If you don't have the Trade Setup app. And just remember, you can join us on Twitter. You'll see the top left-hand corner of the screen up there. You'll see that. And Facebook, bottom right, is the YouTube handle. I think you call it, if that's the technical term. General advice only. So anything I say is generally my ramblings. That's about it. So let me minimize that. What I'm going to do today is go through, let's set one more thing up. Yeah, so you should see the left-hand side of the screen a lot better, especially with the charts. You should see the numbers. Yep, all good. Just go check on a few things. So what I'm going to go through, hopefully it's some benefit. So especially if you're into your technical analysis, just some tips, things that I've been looking at. So especially intraday, which I think a lot of people don't do, but it's worth just plugging away as intraday charts, even if you're practicing, because what it's doing is practicing your technical analysis or your reading of the price action. And like you obviously read it slightly differently. It's a lot easier with shares because you're generally biased up the whole time. If 99% of the time you're biased up, you'll do well. And as long as you've got solid risk management. But with intraday, it's sort of an each way bet, 50-50 each way up and down. But as long as it just means that you're honing your skills with your price action, you're reading your charts, reading the strength between buyers and sellers, developing a bias, developing your levels, that sort of thing. So I've got a couple of charts I'll show you for anyone interested, and then we'll go through the portfolio of what we've got up and running. What is that? That's weird. Yeah, so I've got the portfolio. We'll go through of the positions. And what I'm looking at, because some of them are not that they're going bad, it's just that they hadn't done anything like I would have expected. I do expect the ASX to keep ticking higher, which it's doing today, up 25 points, you'll see. I expect it to push higher, so some of those shares that are just not performing like I would have expected. So we'll go through what my views are, where I'm looking to potential to hold the risk if it doesn't play out. Because sooner or later, the longer it goes sideways, it's going to break. The closer you are to sort of a break, whether it's up or down, and if things are starting to bank to stack up on the downside, then I'm going to have to worry about risk. So I'll chat about those as well, and we'll just go through a bit of an overview if anyone's interested on the overall market. Copper, gold, things like that, because I know there's a lot of gold bulls pretty much everywhere. Gold bulls are rampant, and I'm not a gold bull at the moment. I think it's just too tied to the US dollar. There's no safe haven. Everyone likes to think it's a safe haven. It's not at the moment. I mean, if the US dollar rockets up, gold will probably get hit because it's acting more like a currency than anything else. So US dollar probably is a safe haven. So people would have expected the US dollar falling, gold would have taken off, but it's just not. It did have a big run, and it's been lately. It's chopping around you up $20. Okay, everyone's thinking it's great, and then it's down $20. It's chopping around and really washing you out. So you've got to be a bit more active with your trades on gold as well, not just buy and hold scenario. So we'll have a look at gold, copper, and oil. Had a strange night. I'll show you what I'm talking about. Look at oil. It's a 30-minute on a daily chart. Sorry, 30-minute chart had this big, pressing down, and that was, if you're thinking that's, this is why I always say be wary of flushes, especially in the key levels when extended into a level. There's going to be a bunch of people that'll have a sell and stop there, expecting it to break down because of this bigger structure. But more often than not, they're flushing a level, trapping some traders short, and then squeezing them back out. And you can see that with that ramp straight back up again. I think it was at 12:30 or thereabouts. I can't really find anything. I don't know if anything's popped up at that time because copper did the same thing, whereas the US dollar, which you would have thought had moved at that time, was really going sideways. So you can see that ramp up was quite hard, which would have suggested a solid press lower in the US dollar, but the US dollar at 12:30 did nothing. Next hour or so. It moved later on, but I think that's in conjunction, that move down in conjunction to crude oil ticking up and maybe some currency movements as well. But that really, those two movements in crude oil and and copper. I haven't checked out any silver. What's that? Iron ore. It's a useless chart. Didn't move. Yeah, US dollar didn't move. So that was a good old-fashioned ramping. Sticking it to the shorts pretty much. Once we sold off. So, and this is a level we've been watching for a while. We've seen some action here previously. Action previously lifted off. So that there's buying. So that's a zone where buyers have stuck their neck out and went long. It's lifted. They're all great. So come back into that zone. We've reacted up off that zone again. So it's come back in there, found support, lifted back up. So touched on those highs a couple of times, sold off, flushed it out, and reacted straight back up again. So, third time we've just flushed out a few stops, trapped a few shorts, squeezed them back out. So it'll be interesting to see whether crude now chops around here and lifts again back up through 52.80 and so on. I think longer term picture for a lot of these, like crude and your metals and US dollar's basically, it's starting to get a bit of a safe haven bit, but that's because it's way down on that support, major support. So it's more shorts getting edgy than a safe haven bit, I would suggest. US dollar's lifting a bit at the moment. This is what I'm looking at. Probably looks a bit strange, you've got colors everywhere, but minor support through here at around that 90 zone. I thought we might have rolled today, but it looks like we're sort of contracting back up again. That trend is still down. We could get back up to 90.30, 90.40, 90.40 today, and then squeeze lower. But that's your short-term support through there. That's potentially just building up some longs off there, turn around and smack them back out. I think the stimulus is obviously weighing on that. Stimulus to come and potential stimulus to come as well, weighing on the US dollar. So basically, there's still some shorts in play, even though it's way down to support. So if we go down to the longer term charts, it's a 30. We go to a daily, you'll see what I mean. And even a weekly, you've got some support through here, and the biggest support, which is at levels at which it's traded at before. Just go to probably a weekly. There you go. You see it on the weekly. Now we traded off that zone, not so much. Trade off that zone. This is way back. We're talking 98. Went through, reacted again, reacted again, reacted again and again. Built a base, went straight through it, come back up, found a bit of support off it, pushed back into the zone. So that zone's been active for quite a while, for many years. So, we're down in there now. So you don't know whether it's going to go up or down, but you know that what that's going to do, anyone that's been selling into that zone is going to be keep an eye on that for potentially some strength to come back in. So that's why, when you're off the zone, you're sort of in no man's land. The trend is your friend, but when the trend is your friend, and it could be coming to an end. I'm a poet. You're going to be looking at it a bit harder. So when you start breaking down your charts, go back to the daily. You want to see what's happened to the daily. Okay, we've got a bit of resistance up here at 91.10, which is still holding that trend down. We may be finding a bit of support in here. You'll see, and this is when we drop down the charts, better back to an hourly, 2 hourly. That's why we're finding, is this going to be an inside bid zone? Inside bid leading to new highs and breaking up through this level and up and out of that key support zone? Or are we holding that? We're starting to find, what do you call it? Head and shoulders, shoulder, head, another shoulder starting to, and impressing back down. We don't know just yet. It's a bit of an each way bet. It's like a lot of the shorts have been in play for pretty much a year. Shorting into the US dollar, it's been the favored trade. It's been a big trade. Everyone's shorting. Every man and his dog's been shorting the US dollar. Is it coming to an end or not? Obviously, you expect when it comes into a key major support zone, there's going to be some profit taking. Doesn't mean the trend is over. It just maybe means we have to potentially grind our way up, flush out a few more shorts, and then the market can turn around and break straight back down below. Or it just continues on from here. It doesn't really worry. We come back and test from the bottom side back into the resistance, and we roll over again. We don't know. So this time, you just know that what's going to happen is a bit more action, a bit more volatility around that level, off that level. Okay, so that's things to keep an eye on. So we've still got, obviously, watching that quite closely, the US dollar. Now, I'll get onto gold while I'm here talking about the major markets. Gold, we've been watching this 1860 zone for quite a while now. My chart's just got a lot of rubbish on it, so sorry about that. 1860, we saw this market, pressing down here, flushed it out. And when you get that sort of flush, if you get straight back into the zone fairly quickly and grind higher, it's more of a flush. Don't think that that's a short trade. Think that's more of a flush. So you spike into the zone and reacts straight back up off, like we did here, flushed it straight through, took out a lot of stops. There would have been a lot of trap traders there. Shorts below there with stops above. They've just been, have just locked in a loss with this move back up above 1860. So you've got to be wary of those zones. Your traditional style of trading, will do. Traditional style of trading at those levels, it's a lot harder. You can buy the break on stocks because, like I said, they're geared up to go up, and that's it. It's kind of easy technical analysis, or technical analysis 101. But with your major markets, your big markets where the big boys play, you've got to be wary of those levels. Okay, so 1860, we've had this sort of run up, pushed up through. So that's just squeezing out this level again. It's flushing out these. So what we've done is flushed out some, brought in some shorts, flushed them back out. We've got the shorts in play from off this level that were right and maybe holding for a bit longer. They've just been flushed out too. So it's cleaned out both sides of the market. We extend that across, but now it's back below. So we've got this uptrend, basically taking it from the low across this low here, broken down. Are we going to get, which I tend to believe with this kind of action, that we're going to get some pressure, which would suggest that this US dollar is going to grind higher, which I didn't really expect. But I'm expecting this 1860 to hold on gold. We might come back down and test these lows at 1837. We might come all the way back down to retest 1820, which would suggest another $30 drop from here. Okay, so not going to be bullish on gold at all at this moment. We just have to wait and see. If we start to fade and we hold a higher level, 1845, and start to get buyers step in and we're oversold, you know how I like to use my MACD for momentum and your stochastics, get back down to oversold. So oversold meaning a lot of selling pressure coming in, but we can't get down to the lows, if the selling pressure gets heavy, as in pushing from overbought to oversold, you would expect, if it's going down, to get through, to at least be at this zone or through. But when it fades and it starts to, you get into the oversold market when it's starting to chop around at a higher level, that's buyers stepping in. Okay, so that's what you're looking at and how you're sort of adjusting using your stochastics and whatever set up. I've got it set at 11. You can set it standard 14, but it's up to you. Okay, so that's gold. Dollar currencies we won't worry about. Actually, just look at the yen. Yen, I thought this yen was going to hold and start to flush lower, but we've got this downtrend. It could just be hovering here, flushing out these highs again, and then gets knocked down. But the US dollar looks to be finding some strength at the moment, which would knock down the Aussie. Find a bit of weakness in the Aussie and the euro. Bit of weakness with regards to US dollar. So they're potentially a bit of a flush lower on both of those currencies. And the Aussie is a risk-based currency as well, so a bit of a risk off on Friday. Saw some pressure into the Aussie. S&P. So that was the S&P. Gap down, and then sort of grinded its way back up into the last, the dying moments of the session, which we got a bit of selling straight back into that. Same with the Dow. Bit of selling pressure into the close the last hour or so. But yeah, it made back a lot of those losses from that from the open. The Nasdaq, I think, actually finished up. It's not saying it did here, but it finished up slightly, a lot more controlled. But you probably find that we're starting to get a bit of heavy action here. Good run up. Same with the Dow. Good sort of spurt up into new highs, and then potentially finding a bit of pressure up here. It's all really, to me, it's about this low. We'll see if we hold up that low tonight. If we get through it, we might see we're going to unwind a bit more to this low in here, which you see is actually traded there before, previously into it, fell away, went straight through, come back and test it. So that's why I'm sort of looking at this retest, and for these levels to hold, maybe flush it, and then we rally back up to new highs. We'll just have to wait and see what tonight brings us. But yeah, either way, we'll get onto the ASX. To me, I just wonder if I go over here. Let's just make that across. That is a good little chart. Trend is up. We've got some consolidation through here the previous few days. Just go to a 6-month chart. Consolidation through here, and we're starting to lift again. And this was that important high low that we've been mentioning a few times now, 66.50. You've got market pressed up, pull back, flushed out a few of the longs, late longs especially. We're getting back up here, getting a bit tentative here. As you get through the highs, you don't get through much. You know that those pullbacks are going to start to get a little bit deeper. The fact that they didn't, we took out this high low just in here. You can see it took it out, retested that level. It tested a couple of times and held, and then we started to pressure to the upside again. To me, that was a sure sign that we're going to probably tick up to new highs. We're going to take out those highs at 67.56 or thereabouts. So I think I sent out a couple of email or alerts previously on the ASX looking to, just keep an eye on that level. Bias is still up, momentum's up, EMAs are up. That momentum sort of faded off. We held, so when you start to fade in momentum, but it's holding the level, it's consolidating those highs. That's an important key. If you're consolidating the highs, momentum's fading, it means it's getting supported up there. And when momentum starts kicking in again and the short sellers start to give up, buyers take control and we start to head higher again. If you see these deeper pullbacks, it means that buyers are not really standing in the way of selling pressure, momentum's starting to roll, okay, and you're just got to be careful. It's as simple as that. All right, so consolidate those highs around that 6,600, held 66.50, and we're starting to look into new highs. So if we go back to where we're going to, I'm looking to 60 to 7,000, potentially to new all-time highs. Just wait and see. I mean, this could pick up a bit of steam, have a couple of good sessions, and we're up there pretty quickly. Okay, so it could be by the end of the week. It's only 100 and above 6,000, 170 points. Will take us a couple of sessions this week. We're above 7,000. We're teetering on making new all-time highs. So a lot of people wouldn't have expected that, myself included, but we're pushing up there. So that's my view of the markets. I'm biased up on the indexes, the ASX especially. The main index, so the Dow, we just wait, maybe need to flush out a few players first because it is being extended. But every time it's extended, it brings in shorts. They get fodder if you get squeezed out. Remember, there's nowhere really to put your money. Valuations are extended in the US. Doesn't matter. If you've got nowhere else to put your money, they'll keep getting extended because everyone's long and everyone's happy. They'll keep buying up, averaging in, or building positions potentially, or whatever you want to call it. But as you're sitting on a lot of profits, you happily put some more risk on in the market. If it starts rallying, you're just building your position. But there's going to be a time when the great reckoning, where markets could flush lower and really start to put the squeeze and put the pressure on. But at the moment, I don't think so. I think everyone's looking at stimulus. We've got a vaccine, a bit slower than expected. I think that's put a bit of pause into these markets. The fact that it's the rollout of the vaccine slower, so everyone's anticipating a certain time or whatever, which means further lockdowns for longer, more pressure on people, wages, all that sort of stuff, which probably has to bring in more stimulus. But I think, the ending could be in sight with respect to markets and growth and coming out the other end. It's just the US has got to lift their game, and Europe too. But we'll see how that goes. Now, what I'm going to go over, I'll quickly go over some intraday stuff. So we've talked about this a few times. So this is intraday. This was on the Hang Seng. I trade a lot of intraday on the Hang Seng, but it's all about your key levels. So we've got the open, and just noticing when weakness is coming in, and I haven't got the key levels marked up here, but this is just a marking up. So every day I would go through, if I've traded, I marked up where I got short, where I got long, what I was looking for, and all that sort of stuff. And I'd mark it up, take note. It just helps me if you're going through a bad patch, like I'd say many times. It's good to go back through when you're performing well, you're reading the charts well, you're reading the price action a lot better. It's good to go through and just have you veered off course. Yeah, if you can see that you're starting to look at them differently, or you're starting to go away from your trading plan, it'll stand out. But if it doesn't stand out, if nothing's really changed, it's just a bad patch, you'll get over it. As long as you can stick with your plan and your edge is still there. If your edge has disappeared, then yeah, you've got a little bit more of a problem. You have to start redefining or readjusting your edge. So in saying that, I'll go through all the charts. I like my index trading on intraday on the Hang Seng. I think there's a lot of opportunity. So this was the play that we're looking at. I was looking at because at this stage, the start of the market's it's coming under some pressure. You don't know if it's going up, down, or sideways, but I'm looking for what happens on the swing levels, where we starting to fade weakness, where can we fade some strength or fade weakness or continuation trades, all that sort of stuff. And the first trade was just in here when I think there's a resistance zone through here and the market was toying with it. We sort of opened up on the left-hand side. You'll see we opened up here, pressed down, higher low, pressed in, faded again, deeper correction, high low in here. I didn't trade that. I traded in here. I think might have been my first trade. I think I was looking at that, but it made sense. You've got a high low in here. You've got momentum's coming up. It's against the EMAs, which I don't technically like to trade, especially when I was sort of biased down for that. I thought we might see some heat come out of the market. And as it played out, it happened the next day. I think we got a bit of a sell-off. But this day, we're still looking to extend on that. The daily charts well and truly extended on the index. So it's just taking that into account. I thought if we get some weakness, it could really unravel quite quickly. So I was looking here. We've got a bit of a pullback, faded, and I like that sort of action when you keep probing above this high. You're probing above a level and finishing below, probing and finishing below. Once we got this candle in here, a green candle faded, I was short. It didn't go anywhere, so I faded. I actually cut it for a small gain, and then I started looking at it, thinking if we start to hold up on these EMAs, we could extend on those gains because there's nothing to say because we've got this weakness here. There's nothing to say, and especially the way we've recovered a lot of those losses, we recovered all the way back up here. If this, especially in this zone in here, if it starts to hold up as a high low, you've got to be wary, okay? And I think it didn't. I was waiting for a long. I think we were in the chat here, waiting for a long. Then we got this big red candle. And the fact that it come into a bit of confluence there, with retesting this horizontal level here and this rising support, dynamic support, the fact that we got some confluence, I was still looking for longs, even though it was a big flush. So I didn't get long in here. I got long in here, faded that move up there off that level. I got to about here, and then basically I had to call it a day and missed, as it be, I missed all this move, which the prime set up really, which became a lot more clear. So all this action here was a bit more chopped. So you're trying to fade different moves. But when it becomes a bit clearer, when you start to flush lower, so you've got a flush and then you start to hold a higher low after a bit of a breakout of, we're going from contraction into expansion. So into expansion means we're starting to break out to the top side. You can see that with this move, a minor pullback, and then you're going long in here and you've got a nice steady move up, which could have made some really handy gains on that one. But it happens after, a lot of time it happens after a flush. it cleans out some people, puts them on the sidelines. I really like seeing this move into positive territory on the MACD back to the zero, and you're looking for expansion back up again. So momentum's up, has a bit of a pause, momentum starts to turn up again, which you got. Stochastics on the oversold at a higher level. So everything was working out quite well. So that was that day. The very next day, we've got a bit of a, find that. Well, it's here, a bit of a sell-off, which not here, it's over here. There you go. So that's when you got that breakdown, and I just marked up, I wasn't trading that day, just marked up some really nice prime shorts. So anyone that traded that, well done. There's a few guys that did. And I just went and marked that up for, like I said, referencing purposes, and mark up where's my edge. My edge is when the MAs are rolling over, you're fading some, you're trying to get in early. We've got momentum starting to roll. The stochastics heading down. If we start to break down, and it gets a bit of a head of a steam, yeah, great. And that was a good setup. There was another setup here, but it was a bit extended into that level. That was more of the known. When you're going sideways here, this trade here, short, is the unknown. So you like to trade in the unknown when a lot of people are not, it hasn't got that, it's not hard and fast which way it's going. So that there is trading into the unknown. And once it starts to become a bit clear, we're heading south, we get a bit of consolidation here and another probe lower or another extension lower. That's the known. So it's kind of, yeah, it's a lot clearer trade, but it's not going to, the payout is not as good. So I'm ideally looking to trade in the unknown. Once you start to get this kind of reaction back up and we start to get this lower high come to play with reference to this previous high, MAs are down, you're looking for a major leg down, major pullback, another major leg down, okay? And you've got another couple of good entries. You could have entered short off here, more off a candle. You've got everything coming to play here, a bit of divergence. Stochastics back in overbought territory at a lower level with reference to last time it was an overbought territory. Momentum's coming from underneath, starting to fade momentum as well. Momentum's starting to pick up steam on the way down. And then you've got your couple of short setups you could have traded into. So that was, yeah, I thought I'd talk about that because that's, like I said, your technical analysis, trying to read momentum in a session, trying to read momentum off the levels. Are you going to extend into a levels? Momentum extended there. What am I trying to do? But it works in with what we're looking at on your shares. So if we go over now, I'll quickly go over them. What we've got, so GMA is Gemworth Mortgage. I really like this. I think it's pretty clear. I'll get on to, actually, I'm going to use this on the daily. This is TradingView. So I've got my levels. It's just a lot easier to draw on. You can see, all right, GMA. We'll start off with Mount Gibson, all right. So this is one we've had for a while. We booked some gains from, I think it was 77, 98 and a half, 99 and a half. Booked some gains. It's starting to just hold under that dollar mark. You can see that MAs are starting to flatten out a bit. It doesn't mean they're going to. It doesn't mean that you bail but we are up into this zone up here. Okay, so that's what we're looking at. We're starting to fade, potentially fade there. We're going to tighten up, and we have tightened up our stop, so we could get squeezed out at 93, I think it is. So be it. Get squeezed out. If we have a bigger retracement off that level, we might start to squeeze out a lot of these longs that built up, or we might just be sitting here and then power straight up and through and catch a lot of shorts off guard. But either way, the bigger time frame, I think looks quite good. You've got this big move up, big press lower, this lower high come to play. A lot of buyers were stepping in, and that level there, that level through here, about sort of 58 mark, lifted off that level. But it's, when you look at your weekly charts, if you look at your weekly here, it's been one solid move up. So it really hasn't, we'll go and look at it, really hasn't taken a bit of a breather. So we're trading off the daily, but it hasn't taken a breather on the weekly. And you can start to see a couple of red candles get up. So it's kind of pointing the finger at that level. Not not the bird, but it's pointing, an obvious kind of a level up here that it might be starting to pause at. And it's taken note of. So when you look at the weekly and we're finding momentum starting to roll, momentum's kind of extended. We're extended here on the weekly. Your stochastics, we're expecting a bit of a fade off that level and maybe a bit of a pullback, clean out a bit of this leg and reset. If it resets, wherever it's going to reset, I don't know. But if we reset back into that zone, somewhere around 80 or thereabouts, we might look for another long, okay? But for now, we've taken a partial, you booked about 28%, I think it was, nearly 30% on that, 29.2, and we're up about 27% at the moment. So happy with that. You know, we've got a good size position on that. If we get stopped out, we'll just look to reset. But nothing, you know, there's nothing really to chat about too much in that. Next one, we've got CVN. Where did we get in CVN? 28.5. It's around the 30 mark. Yeah, I wish that would start to lift a bit better. It's in an uptrend, so that you don't have to worry too much. It's in kind of, and the fact is, the overall structure, if we get sort of weekly, the overall structure, we could start to find some resistance around where we are at the moment, and that's probably what's happening. We're getting a bit of those longer term sellers coming in, but if the daily sticks with what it's doing, then I think, yeah, it's going to keep grinding higher. We might raise our stop, tighten it up. I think it's at 23 at the moment. Let me just see. 23.5 at the moment, so we might tighten it up. So 23.5 is, you know, is way down here below this low. I might tighten it up, you know, closer, so we're not taking too much risk on that. But we'll see how we go. But there's not much to talk about. You know, we've got higher lows. We're bouncing off the MAs here. It's pulled back the last few days, but we are getting supported, and I like the way it's just flushed through that level around 30, finishing back above, you know, pushing back above. If we can sort of hold 30 and we start to lift and start attacking 32, we're going to get up through 33.5. But at the moment, it's just sitting and waiting to see what happens, what the market wants to do. But I think with oil itself, I'm quite sort of positive on oil, bullish, even though we had that big move down. I think it just needs to flush out some people. And if the US dollar keeps edging lower, all these sorts of factors, pressure on the US dollar, I'm sort of more bullish on oil than anything else, which would support CVN at least, yeah, keep ticking its way higher. I'll get on to IVC, which is InvoCare. There's sort of one that I've got my eye on because I think I would like to have seen it do something by now. We're consolidating those highs. I think it's more through my impatience than anything else that it hasn't done anything. The key level really is at 1110. If we start to break down too much, we might be contracting to this zone in here, hold that, and then take off. But I'm sort of looking at that. It's been consolidating for quite a while now, just under the 12 buck mark. I expect it from here, and you can see with, you know, stochastics, momentum's come back to that zero. It hasn't lifted in momentum yet. Momentum's faded after this rally up here. We faded back. Stochastics come back into that oversold area, but price itself has really gone sideways, just range sideways. So that's a good sign for that bullish action, because we're holding the top end of that move up, okay, from say 10 bucks up to nearly 12. That $2 rally, we're holding that top end of it, 1150 thereabouts. So if we continue to do that, I'm expecting, especially if the ASX ticks on through to 7,000, I'm expecting that to lift. I just would like to see some better price action in it, so I'm not sort of tempted to do anything stupid. But yeah, I'm still kind of bullish on that one. I think it could do quite well. CGC, don't like that rejection off that high, because really, if that was a continuation, it shouldn't have powered up, you know, and then given up all of those gains from $4. So I'm a bit nervous on that one. Obviously, the stops are held just below. We'll either get stopped out or it takes off again. You know, pretty simple. But it's just the action is not that great, and it doesn't help when you, let's just get into that. It doesn't help when you're just getting through some levels. You know, so you've got sort of this zone through here, gap fill. Potentially we've gone through. We haven't really filled that gap. I don't look at those as much, especially with shares. I don't look at those gap fills as much, but yeah, we gapped down, retested, and then fell over. Okay, and then we come in, we've built a bit of a base through here, which is great. Bit of some lows in there, and we're on our way up. Okay, that's great, but it's kind of like the market support zones are going to try to catch up. So at the moment, that's the support. If we hold that, which I think it will, we're going to get up through 4, 10, 12, and we start to push back up in those highs. If we start to fail here and break down, we're going to get stopped out, and it's probably going to go down to this lower level at 340.50. So either way, that's the way we're playing it. You're just going to give it some time. Can is probably my biggest concern at the moment. But the fact, I think it's had some good news. We had that bit of a grind up, good news, bit of a spike, but it's not, this action here is not like what we saw with this action. Powered up, that pullback support, and we extended up again. In 2 days, bang, up we go. Come all the way back down, we retested into that zone, and now the action is a lot more contained. This action is a lot more contained than what we saw over these couple of days. So it did more in 2 days than it's done in, say, 2 months. Okay, and we're starting to fade off these highs again. But the fact is, it's this resistance zone through here. It's broken through, and that's sort of what I'm looking for. I'm looking for that to continue. It's just that it's doing nothing at the moment. It's had backed off the last few days. It needs to lift soon, otherwise we'll probably get cleaned up on that one. But like I said, there's not much you can do about that. You pick your levels, you pick your areas to play. If they don't work out, they don't work out, and that's what your stops are for. All right. So for now, we're just going to keep an eye on that one. Where we now can 52 stops. So it's down here. We've got a bit of room on that. But it could easily, if we don't hold here, if we don't spike higher from here soon, then it's probably going to come back down and test 47 or there and stop us in the meantime. Like I said, you can't do anything about that. IPL, which is going really, really well. I don't know where that is at the moment. IPL, good news. I thought would support it a bit more today. Not at the moment. Not quite doing it at the moment, but it's had a good run up, and we're long. 248, so somewhere in here on this little high low. You can see exactly why. Got it powered up. It's tried to go through on this push, and it didn't. So we took out this low, grinded through it, and then powered up again. And then that was a prime entry, off your high low, which that's what you're looking at. If you get that in your setups above the MA, sitting on the MAs. Look at this. MACD is perfect. We've come down. Momentum's come down. Back to the MAs. We held the MAs, which is always a great sign. Held the MAs. We started to lift again. So the MACD was back on the rise, or momentum was on the rise when we got the high low. Sometimes you're just looking at, especially with shares, you start to get overbought territory. You can stay overbought for quite a while as it just keeps ticking higher, which IPL's done. So really for me, I'm looking somewhere up here to see if we can take some profit. This zone up here, just want to see what it does. If we start to stall too many times, like you stall, get a couple of red days and we go through, make new highs, we start to stagger our way up here, I might take it earlier. But for now, I'm really just looking to see what happens. But yeah, there's not much to do on that one, on Incitec pivot either. And GMA looks good. I think it looks really, really good. It's just we sort of got in nice and early, so we got in at 242, pretty much where it was. 243 and a half. And what are we now? 242. I think it's 243, 242 now. GMA 242, 43. There you go. But holding. But that action there itself is really, really nice. If you go back to the weekly, the fact that we've done this action, we've pressed down, we've come back up, we've got a lower high, come into that support, that support's holding. We've gone through this high and we're starting to consolidate above that high, above, so pretty much where we are at the moment, we're above the MAs on the weekly too. So really we're getting a bit of heat coming out as the market's going sideways, which is great. It's fine. We'll just keep watching it. Back to the daily. So if we just keep consolidating through here, I think we can start to lift. I'm sort of anticipating that we don't see too much below 240 at the moment. Our stops below, we'll see, and we start to lift. We get up through 254 from roughly 240 thereabouts. We're going to take out 272 and we're going to start working our way back up into this zone. Okay, where there was previous selling, where it struggled. Okay, so that's where I'm anticipating. And if you go and take a measured move, and this is what I like doing a lot, we just clone that. That makes sense. Okay, we've got nice price action there, consolidating through here. That measured move takes you back up in this zone. Okay, so that's essentially what I'm looking at. So a move above that $3, 350 zone, and then we'll just see we'll lock in some gains as we go. And last one, brain chip. Any questions, guys? Just chuck them in the chat as we go. Uh, yeah, that's it. That's it. There, we're BrainChip's looking good. We've got our little extension. We've got long. Let's pull back a bit at the moment. I'm looking for the same sort of thing, this high, low to hold. Extend up through these highs at 67 and start to have a bit of a run on these highs at 90 cents a dollar. But that's better action than these expansionary moves higher. And we'll just see what the volume's saying too. So some good little volume on this move up. Um, yeah, it's stalling a bit now. There is a chance we fall from here back through 55, but I think we consolidate and we power up again. But that's pretty much all I'm looking through there. So we've got a couple of, that's our portfolio. Um, Not much happening just at this stage. I mean, it's just really, we built a couple of good positions. I think we're doing well. All in all, we've got about 8 positions. I think 5 are up, 3 are down slightly. Um, and the aim is to maximize those gains and to minimize the losses. Simple as that. So get your prime setups. Hopefully they all go in your favor. Like I said, it plays in well to the ASX. If we continue this grind up to 7,000, we should continue to add gains to the portfolio. And then we'll look to take off partials as we go. So that's it. That's it. We'll go through some shares now. If you want anything you want to look at, put it into the chat. I've got NVX and PLL to look at first. Anything else? Is anyone else there just wants to have a quick look at something? Yeah, check it in the chat. Before we get into that, Lee Creek, I kind of like that. I like the way it's moving. It's had some good news. A bit of work there, but it's had a couple of capital raisings a while ago. It's cashed up by the sound of it. Starting to lift and starting to do some good things. I think they're starting to get some, they're doing things, result drilling, whatever it may be. Not so crash shot in the fundamentals, but it's looking good. We're starting to hold that high low around 15 now. So that, to me, the more work you consolidate at a level, I think the higher the expansionary move is going to be, or the more solid that trend, the more entrenched that trend up will be. So for now, it's just doing some work. If we get a high low on this one, we'll be looking at getting into LCK as well, because I think, look at the volume that's come in the last couple of days. Great. Volume started to step in on this little run up, faded off that. Obviously, it come back down and off that, but held up 15 before we get that press higher as well. But we'll see. Just before I go, HMX is another one that I want to. I've been long this for a while, and look at that move up. Anyone that doesn't know, I don't know what's going on. I think they had some good copper gold drill results, and bang, up we go from 4 cents to what, 9. It's just pressed through 10 and a half, traded 10 and a half today. So you could get that mucking around the 10 cent, between 10 and 10 and a half. Anyone that's loaded up prior to that, especially on this pullback a couple of days ago, what was that, Thursday? That little pullback on Thursday, did nothing on Friday, and we got some news out today. They're drilling more holes, and they might be playing the 10-cent game, just edging out some of the bigger buyers that loaded up in some volume. But we'll see. That could power through. So I've got my eye on that one. I've got 3.4 entry. So I've held that for a while. It was looking great. Didn't really break down here and start to lift, and then lo and behold, we got that news. So it's, for me, great. I just don't want to muck around with it too much. All right, let's get on to those shares. We've got NVX, not Z, X. NVX is powering up. Not much you can do there. It's going high. If you've got in this move, and I think I did alert this one not to get in, but just to keep an eye on, and it just went bang. Up we go. I can't remember if I did or didn't. I'll have to check on that. But anyway, not to worry. So the price action itself is quite good. Had this lift here. We've got some volume stepping in when it pushed through a dollar. Consolidated around a dollar, started to lift again. We got a bit of a power move up through 2, and then we come straight back down in September. So obviously, I don't know, news driven or a bit of a sell off. Not sure exactly what the ASX was doing in September. Yeah, it started moving down in September, so probably just anyone that's been long prior is just taking the opportunity to lock in some gains there, I'd say. But then the way it was holding up at a dollar again was really, really nice. Once we started getting this move up and off a dollar and started taking out some of these lower highs, it was really about the entry. You're sitting on the MAs again, momentum's starting to lift. It's just about the entry, and really there was probably the only entry I could see that I would like was sort of through 180, which worked out fine. But I'd be pretty much, we've got no resistance zones to start evaluating what happens with the buying pressure into that resistance. There's nothing. It's sort of clear skies at the moment. So, for me, I'd be locking in stops behind daily lows because that's extended. You're going to get a move. You're going to get, doesn't matter what they're doing, you're going to get some profit taking sooner or later. It's just nature. It's just people's nature. If you think it's going to $5, fine. I mean, everyone can think it's going to $5, but if they start seeing the gains evaporating, it becomes more of a mental game than a fundamental or technical. You could still be adamant it's going there, but if it starts to come down, you're going to go, oh, I'll just take some risk off the table, and changing your tune. And a lot of people do, and that's the psychology of trading, the psychology side. Okay, so I'm going to be wary of that when the moves are so extended like that. Can we see that okay, just before I keep yabbering on? Yep. So that's the price action there. Not much to say on that. I wouldn't be buying it up here. I want to see a good corrective move lower, clean out some longs before I start stepping in if it starts to build again. So for me, this is off the cards. MEX PLL, probably the same. I think I'm pied one. Look, that's looking good. Entry's a lot better. You could have taken an entry the break of these highs, but you got done on the gap. It gapped up, taken a couple of days of heat. It's turned out all right. If you took an entry, I'll just draw it up. I'll draw it where I see the entries, and then we'll talk about what's happening. All right. So what I'm seeing here is, as you know, you've got zones through here, and then so what you're seeing, a power move up, pull back, start to find a bid through here. So you don't just buy off that level when it comes back into it because you don't know if it's going to hold or not, especially if there's lower high come to play. You're going to move up, move down. So that's once you get to here and we start to lift off that level, we've got a high low in play above 30. Okay, so once the high low is in play, you know that buyers are starting to step in there and they're going to have to start stepping in higher and chasing it if they want a piece of the action. So for me, prime, high low in here, buy through there. It was a nice buy on the break there, but the problem is it probably, it got you on the open. You gapped up on the open, so you're giving away a few cents, but your stops still got to hold. It just means that you've taken more risk than what you initially thought, but you don't adjust your risk level. Okay, you've just got to take a bigger hit if you're wrong. And I was talking about this to someone recently. I would never have a dollar risk. I don't say, okay, from here to I'm getting in there, I'm going to take a standard $1,000 risk on a 10 grand position, say. So depending on what that is, you're always buying $10,000 worth. Once your entry's calculated, so it's at 41 or even 42, you've taken $1,000 risk. Your stop might be somewhere in between the high low and the highs there, and it could easily come back, and especially if it's a lot higher, come back, stop you out, and go. Okay, and you're right. You're right on the trade. You're wrong on your execution. So I always have I would rather say $10,000 position. My stop sometimes going to be bigger on a dollar value, and sometimes it's going to be small. Okay, depending on where my high or low is, but I'm always putting my risk where I'm proven wrong. The difference with having your stop somewhere above the high or low is the fact that you don't have to be proven. The market's not proven wrong, but you are. Does that make sense? So that's always an issue. You've just got to take note of that. So buy a stop there. My stop's going to be in the same spot no matter what. If I happen to get slippage on it, then I'm just taking slightly bigger risk. I don't really want to see if I'm watching the match off and it's way up here. I'm going to just not take the position. Simple as that. I'm not going to trade that when it's extended, and because I'm expecting them to move back down. If it comes somewhere up there on news, how you get these big gaps on the news, I'm not going to be taking that trade. Something like that, yeah, you could take it. You got a few cent slippage because you're still well within those highs. All right, and the market continued on up. So for now, the market's still heading high. You're not proven wrong. Your risk is probably around 55. Okay, I'm not taking a trade up into these previous highs when the momentum's starting to get a bit stretched, as in momentum's well and truly established. Once you start getting up into those levels, I want to see if there's a reaction off that level. So what I'm looking at, how I'm trading those levels, if you extended into it, you can extend into it, and you can start to fade off it. Okay, and then that's why I don't want to buy into it. I want to wait for that bigger correction and then start to work off a bigger base, like that, lower. If it gets through the level, then I'm looking to see what happens on the pullback. And if we start to hold there, then I might have to get long if I believe in that stock. Okay, but I want to work off a key level, and I just want to take note of key levels. If I miss it, I don't care. It's as simple as that. All right, so that's your two there. ARB, which Hong Kong's starting to kick off, which is it's making back the losses from the other day. And our market probably, we're following it. We're doing nothing, which is not unusual. ARB, that's a cracker, Pete. That looks nice, especially after today. If you got long from 34, your stop can be around 30. Your risk there, you can tighten up your risk to below these lows, and away you go. The momentum's on your side, it's heading higher. Not much volume as such, but if you get tomorrow's accompanied by a good increase in volume, we will get a lot of volume. It's 3 million today. If we get the volume lifting into the close where you normally get your pros or trading, then yeah, that's looking great. The weekly, I'll just make that a bit bigger. The weekly's just broken through into new highs through 34. So yeah, it's a bit extended on your weekly. You've got a good extension move up, pull back with the MAs. To me, that weekly is going to be harder to trade purely because you are extended. Momentum's extended to the upside. It's quite clear. You just got to ask yourself how much is left in that trend up. If you know your fundamentals and it's power, it's valued at $50, then so be it. If it's valued at $34, then maybe the market's going to start getting a bit overextended, and we're going to start to see some heat come out. But either way, that daily's looking really good. You've got good scenario. You've got pressured higher, flush lower in November, consolidated that move, consolidated this trend up. So good, powerful. The higher it consolidates, remember, the stronger the trend. The bigger the pullback, the weaker the trend. And if it pulls back down to, say here, 20, you want to really be working off a higher low. Pull back, consolidate, press up, pull back, you got your high low. So you just got a better structure coming into play. But when it's higher, like this, you've got that move up, it's pulled back here, it's consolidating those highs, then you've got this high low coming to play. Yeah, great. It's still looking pretty good. It's a good, strong trend. So it's really just a matter of seeing whether you're right or wrong from here. But nice one, Pete. Tech one, daily looks like a bit of chop suey to me, really. And the weekly is not looking much better. That weekly chart, apart from that flush higher, is looking more sideways action over the longer term. And just, so you start to buy these breakouts. If you buy a breakout, considering what's happened in the past, you can get chopped up on a deep correction. Okay, so you've got to be committed to this stock if you believe in it fundamentally, because the technical side to me looks like a bit of rubbish. It's not rubbish as such, but it's a tougher one to trade. The only thing I'm seeing is that, and I'll draw this up, I'll just on the weekly, and we'll see what it looks like on the daily. That's not what I want. I want this, don't I? I bought ARB on the open this morning. Nice, Pete. Nice trade, mate. It's just a good old-fashioned trade. High, low, good strength. Nice ARB. This one here, I'm seeing, that level. So you've got this pullback. The market's looking weak there. Okay, it's looking great. You're buying in here. It got up to the highs. So as soon as you get to the highs, and we start fading off those highs again, you're generally going to attack the most recent higher low, which is down through here at $7, which it did. Okay, it attacked that, flushed it out at the start of this year on a big pullback. Then it ramped up again. So you've sort of got that there's a washout. So that level is still in play at 7. And then you've got potentially 750 is what it's going to work off. Okay, so 750 is a zone. Even if you're wrong and it doesn't do anything, we just start chugging away back up to 9. If you can get $1 up your sleeve on that, so that's pretty good. As long as your risk rewards are at 1-to-1, 2-to-1. Because even if it's 1-to-1, it's worth taking because you're not sure whether it's going to break out or not. But if it starts to fade off that level, you just lock in a small gain and reassess. Okay, but for now, 750 level, you can see the way it reacted up off that level last week, and you've got, your momentum sort of going that zero line just below. It's still holding up, bit of divergence there. Got that divergence where you got momentum's fading at a higher level, but it's the same level on the price. Reacted good green candle off the level, so you know that it's an active level, meaning people are willing to buy it there. You just don't know if there's enough committed buyers and more committed sellers. Okay, so you're really trying to assess that over the coming week or so. If you get into the daily, so looking at that on your weekly, if you go to your daily, it's not showing anything for me either. I want to see this level hold. If we get a bit of a pullback, and consolidation through above 8, and then you break to the top side, you know where your risk is going to be. A break of 8.25, say, with your risk below 8. But for now, that hasn't played out just yet. I wouldn't trade that off a couple of candles there, because I think that could extend to 8.50 and come falling back down. You'll want to see more time put in that consolidation, the bigger the move up, like I was saying before. Okay, so we'll just see how that goes. All right, that's everything. We've got through those. I think I've chatted probably enough. Just getting on the hour, so we'll probably call it quits there. If there's anything else that anyone wants to look at, feel free to send us an email to support@tradesetup.com.au, and I'll get back to you. Otherwise, we'll keep it for next stream, next Monday. Like I said, if you like what you hear, it'd be great. And if you're looking this late and you get to the end, it'd be great if you can leave us a like and subscribe to our YouTube channel. All right, guys, for now, I'll probably call it quits there. We're up above. We just moved up a few points since we've been chatting. Market's still looking fairly good. My stocks themselves are not looking to crash. I like the IVC. I want to see that one start to get a bit of wriggle on. The rest of them, CVN, yeah, it's a bit of a bummer. We're getting some selling pressure coming in there, and you can see that they're capping it. And you get these really, anyone that looks at depth, when you get these sort of stupid candles here, and you can say, okay, they've been in there since the 11th, 12th. So they've been orders in there since the 11th of Jan, 13th, and the 20th and 22nd. You know, but don't be surprised when someone's lobbing in 200,000, 250,000. That's just a spoofing kind of an order. They're just lobbing in there. So anyone that's looking at, you know, they're long and they're getting a bit nervous because that's selling. There's a big offer there. They go, oh, there's a big offer there. We're not going to get through that. I might take my profit soon. And they're selling into some buyers that want to buy it. So that same person there that's just really loaded up on that offer are way enough that they could easily move the order. You know, if we start getting it to 33, that's the kind of thing that if it disappears, you know that's just a rubbish order. It's a rubbish selling move. And it happens every day of the week. You'll see them everywhere. Can, I think, was doing it, 90.75. So yeah, that order, that volume there at 75 keeps coming on, going off, coming on, going off. So if we start to pressure up towards 75, that'll disappear. Simple as that. They're trying to get the market to edge down into their bids potentially. So if we start seeing the opposite side, like we're seeing here, what's that? 60? 60s maybe line the sand. They could be starting to sweep into those offers because it's quite thin in between. They're just trying to work that level in between there. So yeah, I don't know how I got sidetracked on that onto volume, but yeah, it's something to keep an eye on if you're looking at volume. But either way, CVN, I want to see if that starts to hold 30. I think they're just trying to pressure it in there with a bit, and they're just trying to soak up any of those, you know, those weak hands that want to get out and lock away at 30. Anyway, we'll call it a day there, guys. Thanks very much for joining me, and we'll speak to you again soon. Have a good week.